Picture this. America's been the hottest party on the planet for decades. Everyone wanted in, from ambitious entrepreneurs to global tycoons, all eager to be part of the action and excitement. Foreign investors didn't just show up, they poured trillions into everything from cutting-edge tech startups to massive infrastructure projects, and even snapped up government bonds like they were VIP tickets. It was a win-win. America got the cash it needed to build, innovate, and expand, while investors found a safe, reliable place to grow their fortunes, often with impressive returns. But now, something's changed. The big spenders are quietly slipping out the back door, taking hundreds of billions with them, sometimes without a word. This isn't just pocket change, it's a seismic shift that's sending shockwaves through the financial world. Imagine the US economy as a giant Jenga tower. Foreign investment forms the solid base, the foundation that keeps everything standing tall. But when those crucial blocks start getting pulled out, the whole structure begins to wobble, threatening to topple over. Suddenly, funding for bridges, tech companies, or even paying government bills gets harder. Projects stall, startups struggle, and the government faces tough choices. This exodus is like a quiet alarm bell ringing in the background, a warning that the world's trust in America as the safest bet is starting to crack. Why is this happening? It's not just one thing. It's a complicated mix of political drama, global economic shifts, rising competition, and unpredictable policies that make investors nervous. It's a story about trust, risk, and the relentless search for the next big opportunity, wherever in the world that might be. We're going to break it all down, step by step, because understanding why the money is leaving is the first step to figuring out if we can ever convince it to come back, or at the very least, get it to text us back and say it's still interested. The stakes are sky high and the entire world is watching to see what happens next. So, what's really driving this dramatic shift? What's making investors think twice? Let's dive deep into the reasons behind this disappearing act of global money and what it means for America's future. Because if America can't fix this, the party that's fueled decades of growth and prosperity might be coming to an end. And nobody wants to be the last one left holding the empty punch bowl. Let's get started and see what's really going on. American politics lately? Less stable democracy, more reality TV chaos? For investors, that's not entertainment, it's a nightmare. They want predictability, not plot twists. Imagine Klaus, a German pension fund manager. He used to love US bonds for their safety. Now, he sees debt ceiling standoffs, trade wars started on social media, and policies changing overnight. Klaus wonders if this party's gotten too wild. Political uncertainty creates real risk. New leaders could rip up trade deals, slap on tariffs, or change tax laws overnight. Investors hate surprises. They want calm, not hurricanes. So they look for calmer waters. Money is a coward. It flees instability. Right now, America's political scene looks like a poker game where the rules change mid-hand. Klaus, he's cashing out and heading home. The message is clear. Stability attracts money. Chaos drives it away. If America wants investors back, it needs to calm the drama. Otherwise, the exodus continues. For decades, America was the only real option for safe, profitable investment. Investors from around the globe flocked to Wall Street, confident that their money would be protected and would grow steadily. But it's 2025 and the world's changed. The financial landscape is more dynamic and interconnected than ever before, and new opportunities are emerging in places that were once overlooked. Emerging markets like Vietnam, India, and Brazil are booming, offering higher returns, even if the risks are a bit higher. These countries are investing heavily in infrastructure, technology, and innovation, attracting global attention. Investors can now put money in a tech park in Bangalore or a solar project in Brazil and see bigger potential gains than in the US. The growth stories in these regions are just beginning, and the upside is hard to ignore. America's still safe, but the explosive growth isn't what it used to be. The US market is mature, and while it remains a cornerstone, it no longer guarantees the highest returns. Sovereign wealth funds from places like Norway and Saudi Arabia are diversifying, putting more money into Asia, Africa, and Latin America. They're seeking new frontiers and fresh opportunities for their massive portfolios. They're not abandoning America, but they're spreading their bets. Diversification is the new mantra, and it's reshaping the flow of global capital. The US is no longer the only superstar, it's just one of several key players. Other markets are stepping up and investors are taking notice. Investors are chasing opportunity, not just safety. They're willing to take calculated risks for the chance at bigger rewards. The world's money is going where it can score the biggest win. Capital is more mobile than ever, and it's flowing to wherever the prospects look brightest. America has to compete now, not just expect the cash to show up. The days of automatic dominance are gone, and the pressure is on to innovate and adapt. The days of being the only game in town are over. The world is open for business, and everyone wants a piece of the action. The competition is fierce, and the money is moving fast. Every market is fighting for attention, and only the most attractive will win. If America wants to stay on top, it needs to up its game. Innovation, agility, and global thinking are more important than ever. Otherwise, the spotlight moves elsewhere. In this new era, no one can afford to stand still. Imagine playing Monopoly for hours. Then the banker changes the rules just as you're about to win. That's how foreign investors feel when U.S. policies shift suddenly. The U.S. uses its financial system as a foreign policy tool, sanctions, asset freezes, and more. Even allies worry. Could our money get trapped if we fall out of favor? Countries like China and Russia are reducing their dependence on the dollar. It's not just about sanctions, domestic policy shifts matter too. A Japanese company builds a factory in Tennessee, then a new government hikes taxes or changes regulations, wrecking their plans. This unpredictability makes long-term planning a nightmare. Investors crave stable rules and the rule of law. When trust erodes, they look elsewhere, even if returns are lower. Peace of mind beats profit when the rules keep changing. America's reputation for stability is on the line. If it can't offer predictability, investors will find someone who can. For decades after World War II, money flowed into the U.S. It was the world's safe haven. Investors everywhere trusted the stability of the American economy, and the dollar became the backbone of global finance. The U.S. was seen as a fortress, a place where capital could weather any storm. Even during the 2008 crisis, when panic swept through markets worldwide, global investors ran to U.S. Treasury bonds. The world's faith in America's financial system seemed unshakable, and the dollar's dominance was never in doubt. But now, the trend is reversing. The certainty that once defined America's financial leadership is starting to fade, replaced by new questions and growing uncertainty. Major holders like China and Japan are slowly reducing their U.S. debt holdings, diversifying into gold and other currencies. They're hedging their bets, seeking safety in a wider range of assets, and signaling a shift in global confidence. This isn't a sudden breakup, it's a trial separation. The world isn't abandoning the U.S. overnight, but it's testing new relationships, exploring alternatives, and seeing what else is out there. America's still the biggest economy, the dollar's still dominant, but the automatic flow of capital is gone. Investors are more cautious, weighing their options, and the old sense of inevitability is slipping away. We're moving from a world where America was the sun to one with several financial centers. London, Hong Kong, and others are rising, creating a more competitive and complex global landscape. Now the U.S. has to compete for investment. It must prove its value, attract capital, and earn the trust that once came automatically. The days of being the only party in town are over, the world's attention is divided, and America must work harder to stand out. The shift is structural, not just a blip. This is a fundamental change in how the world sees and interacts with the U.S. financial system. America's financial dominance is no longer guaranteed. The old rules no longer apply, and the future is up for grabs. The world is watching to see if the U.S. can adapt. Every move is under scrutiny, and every decision matters more than ever. If not, the money will keep moving on. Capital is mobile, and investors will seek out the safest, most promising opportunities wherever they may be. The challenge is real, and the clock is ticking. The window for action is narrowing, and the stakes are higher than ever before. Can America win back the world's trust? The answer will shape not just the U.S., but the future of global finance for years to come. Talk to economists and CEOs and you'll hear calm words, but read between the lines, and they're worried. When the IMF warns of geo-economic fragmentation, that's code for the world's money is splitting into rival camps. This makes the global system more fragile and could cost trillions in lost growth. CEOs talk about resilient supply chains and diversifying footprints. Translation, we can't rely on the U.S. like we used to. They're quietly moving factories, shifting investments, and hedging their bets. Even legendary investors like Ray Dalio are sounding alarms about U.S. debt, political conflict, and the dollar's future. He compares America's situation to the decline of past empires. The warning signs are there: high debt, internal strife, rising challengers. When the experts hedge, it's time to pay attention. The polite language masks real anxiety. The world's financial leaders are preparing for change. America can't ignore the signals. The stakes are too high. Billions leaving the US. Does Chad from Ohio care? Absolutely. It all comes down to borrowing costs. When foreign investors poured in, there was plenty of cash, so interest rates stayed low. Now as money leaves, borrowing gets more expensive. The government pays more to borrow, leaving less for things like healthcare or fixing roads. Companies delay building factories, meaning fewer jobs. Chad's mortgage or car loan, higher rates. A weaker dollar means imports cost more. Phones, clothes, even groceries. Capital flight is a quiet tax on Chad's life. His cost of living rises, borrowing gets harder, and government services shrink. The impact is real, even if Chad never sees a Wall Street headline. The money may be global, but the pain is local. That's why this matters. When America sneezes, the world catches a cold. The backbone of global trade. Over 60% of reserves. Most commodities priced in dollars. Instability in the US sends shockwaves everywhere. Developing countries with dollar-denominated debt can face crises if the dollar spikes. For America's allies, a weak US economy means fewer exports, hurting jobs in Europe, Asia, and beyond. A US recession almost always triggers a global slowdown. The bigger risk, a fragmented world. As trust in the US system fades, countries build their own alternatives, digital currencies, new trade deals, bypassing the dollar. This creates a messier, less efficient global system. Competing rules mean more disputes and instability. The world becomes less connected and less prosperous. America's troubles don't stay at home, they ripple everywhere. The stakes are global. Everyone has skin in this game. The party's thinning, the music's fading. Can America get its groove back? Maybe, but it'll take real work. First, lower the political drama. Investors want stability, not brinkmanship. Predictable policies, reliable government, and steady international relations are key. America must show it's a trustworthy partner again. Second, double down on innovation, education, research, infrastructure. The US needs to be where the next big thing happens. Capital follows opportunity, not just safety. This exodus is a wake-up call. America can't take its financial crown for granted. The world has options now. America doesn't have to be the only choice, but it must be the best one. If it can fix what's broken, the money might just come back. And maybe the party will be better than ever.